Welcome everyone to the new series of Drill with Me. Today we're going to start FTRs, fail to return. But before we go on with the drills, let me show you where you can access these exercises and drills. So when you come to the YouTube channel here, as you see, this is one of my Drill with Me series. So here in the description part, so Drill with Me control practice folder. If you click on this one here, so you'll see that here in the very beginning, we have this PowerPoint. Later on, our drills start from number 1. And so far we have 28 drills there. So you should have done these drills before you try to attempt this FDR series. So that's why it's really important to get to know about the GAN series and learn how to just draw them on the chart, which is very simple and easy. So later on, after you have you downloaded it in your system, you have to go and paste it on this trading view system, chart. And you have to use this tool to just draw and do your practices on the chart. So if you don't know how to draw FDR, you need to just watch the video related to FDR. So I think this is the last lesson before our Drill with Me series. So without further ado, let's just get started with this series. This one is going to be very long because I'm going to show you how well they are working in the system. And the reason is that the more you see something that happens on the chart, the more you can trust it. Okay. Now, the way we were just trying our FDRs was just like, first of all, you have to find in the downtrend, you have to find the higher low or lower high. Okay. So the blue lines here you can see is this one is GAN leg on 5 minute, and sometimes you can use it on 15 minute. Okay, so after you draw that, you have this valid pullback zone. Okay, this is valid pullback for M5. So this blue one is a GAN swing for M15. Okay, and this dark one, gray one, are valid pullback for M1. So sometimes we have this valid pullback for M1 and M1. They're overlapping. Sometimes it happens, and there's nothing wrong about it. So the way we're going to just define our FTR is like this. So we're going to define last higher high, higher low or lower high. I'm not just talking about lower low. I'm not just talking about higher high. Okay, I'm just talking about last lower high and last higher low. Okay, so this is our this is our lower low. Where did it start? The origin of this move is here. It started just right here. Okay, right? Now we're gonna just go and draw a horizontal line there. And if you want to just have the horizontal line, you have to just push the shift button on your keyboard. And later on, after we have this, so we have just the first movement, which is breaking this lower high. Okay, then it is retracing back, and also again it is breaking it back, but it is failing to go below this lower low. Okay, so this is the area that we're going to draw as our FTR zone. Okay, after price getting out of this zone and getting out of let's say this FTR zone. Okay, so it is again coming back to that area and retesting that part, and these are the places that you're looking for involvement. Okay, so these are the places that you're looking for finding triggers. So you have different kinds of entries here. Okay, it could be touch trading, which is reversal trading. So as soon as you see any price is just getting back into this valid pullback zone and also approaching your FTR, you can blindly take a trade in this point, so which I don't recommend. Or you can wait for the reaction and how the price is approaching and how it reacts to this FTR. And later on, take your decision and get inside and get involved. Okay. So the entry things are for the other sessions. So for now, we're just going to work on FTR zone. This is our first FTR zone. Okay. Now, okay, as you see here, we had this first one. Now, if we move to this one, the second one, we have lower low here in this swing, right? This one, you could just take this one or take this one. It doesn't matter. Okay. So now in the lower time frame, if you go to the lower time frame here, so this is a 15-second time frame. If you go to 5-second time frame, you'll see that this one is our valid pullback. But if you want to just have the neat a U-turn here, this one is our last lower high. So again, the same story. Now we're gonna go and draw this one, okay, as you see it here. So here we have this FTR based on the candle. So it means that if we don't have any movement like a 1, 2, 3, as you see here, it's just neat movement, you have to take this FTR, this candle, whole candle as the FTR, okay? Like this. Look, now I'm drawing this from beginning to the end of, the high, the low. And afterward, you can see the reaction here, okay? So by the way, I have not cherry picked this one here. I think the date is 6th of 6, yeah, last week's. So you can go over the chart and plot it on your chart. If you don't have access to premium version of TradingView, or you don't have access to 15-second chart, you can just use JForex, which is a free platform. Okay, you don't need to just pay for that, and I think you can use its demo for as long as 2 weeks or such. So now let's go, and we usually try to find FTRs that they're aligned with our trend, right? We're looking for bullish FTRs. If you are looking for bearish FTRs as well, which is not aligned with our time frame, this movement, okay, higher time frame, you can also do that, but you have to bear in mind that it is low probability setup, okay? Here, this is our last, what is this? This is our last higher high, okay? So which movement led to this one? Okay, here, it came from here, or even if you consider this one, actually, there is no difference, okay? So let's consider both of them, okay? Let's say somebody has taken this as our FTR, okay? Last lower, higher low, and somebody has taken this as last higher low. So it is possible, right? Different kinds of point of view, actually. So if you are going to draw this as your FTR zone, or this FTR zone here. So because we're not going to just go and blindly take any trades out of this, and we're waiting for the reaction of it, or reversing of the price there, or hunting of this FTR, okay? So that's why we're not going to lose a trade, and probability of taking trade, having winning trade is high. So this was the first page. If you go there in the slides, okay, this was number 11. I've done this for you now. So now I'm going to go to the second one. We're going to have 18s of this one. So that's why in the first slides, and the first ones, I'm going to explain them into the detail. Go to the just let me go back there. Yeah. And say exactly what happened on the chart. Sometimes we need more explanation, so I'll go and do that for you. But afterwards, I'm going to just show you the places and the reactions. And bear in mind that I'm just continuing this random place that I have chosen on the chart. And the ones that you're seeing on the other slide are the screenshots of the, segments of this chart. So that's why. So you can go and check on the chart as well for yourself. To just trust the system. It doesn't matter. You don't need to trust me. You have to trust the system. So wait a second. I'm going to pause and upload the new one here. Just a second. I'll come back now. Now, this is the second page in your drill. So as you see, the last FDR we just draw and plotted on the chart were these two. Okay, I said that it doesn't matter if you're just going to take this one or that one. And now that one, the previous one was this, and this is the reaction. We had two reaction for that one. Now we're going to work on this one. Now we have this movement like this. This is our zone here. Okay. Now this is our highest point. Okay. This one is double top. Okay. So you got to take the second one. So this higher low led to this higher high. So that's why we're going to plot a horizontal line on the chart. So now here we have the horizontal line. Now we're going to just say 1, 2, and here we have the confirmation. So this is our confirmation, right? So after confirmation, you can just take the trade out of the first entry, which is immediately like 2 or how many? 1, 2, yes, 2 and 3, and afterwards you can take trade here, okay? After break up this one and trust this FTR, and you break up this trend line in the lower time frame and take your FTR based on these reward, the risk that you're putting up there. So it's more than 1 to 2, even if it doesn't get here. So if you consider just taking this whole move, like you would say that, okay, where on earth I could know that I have to exit here, there, or there. So there are some ways to just not only that one, even predicting that. I mean that not predicting 100%, that prediction. I mean that it is possible to just pinpoint exit point almost 75%, right? But it is not we're not talking about that right now. We're just working on the FTR, which is nested inside the scan swings and valid pullbacks here, right? Now, okay, after we're to here, we have this one. So this is our reaction to the zone. Later on, even if you were taking this one, which is here counter trend for this one, okay? This is our last higher low, okay? Sorry, lower high, let's say. So I'm sometimes getting confused because I don't care about the terms. So here is our lower low, and this one is the one which is the movement originated from there. So now 1, 2, which is and coming down, coming up. This is our FTR zone from the highest point to the lowest point ever. This is our fifth FTR here that we have plotted on the chart. Let me number them so that, wait a second. This is our fifth one, right? Anyways, now this is our FTR. So here we don't have any reaction to that one. So we don't need to just have all the time reactions. So you have to wait for direction. And even if you were just extending it here up now, so you would say that, okay, so I would take a trade here. If you take a trade here, okay, you want to just take this movement up. You consider that it's going to go from this moment, that would go up, okay? So you could do that, but you would get a loss. It's okay, get a loss, no problem. So because your system is as good enough to just cover for your all losses or anything else. Okay, so now we are going up here. Now this is the part. Now we had the FDR here, right? You see, these are the nitty-gritties of the system. Now here we have an FDR which is failed. So you could even consider this parts. So, and you could consider this area. I mean this line, horizontal line, as this one and that one. It means that we call them swaps or flipping FDR. So here you're taking this, okay, this is the movement from the highest point of the break. So you could consider this as our line. Let me just put it on exactly the place that it is broken. So this is the high of the FDR. This is the lowest point it experienced. So now in this just right here, even this one, it was validated. Even if you consider this one, it is okay. Now here it is validated. Now we have the return to the zone, okay, and we have the reaction, and later we have this movement up, right? Now, this was our sixth one, yeah, sixth example. Okay, let me get rid of this. Here we are. Now we're going to work on this one, even the counter trend one. Okay, here we didn't have this movement before when it was live chart, right? So later on, it was just formed. Now, which movement led to this actually higher high? This movement, right? From here, very beginning, it was there. If you just plot your Gann swing there. Now, this is our zone. I mean, the line. Okay. So then we have this movement up. It was validated just right here. We don't have it here. Later, we will see the reaction for this one. Maybe we have the reaction, maybe we don't have the reaction. So, but let's just see on the other slide. I mean, it's going to be on the page 3 of this series. Okay. Now, even if you consider this one, actually, this one is not possible because, yeah, it is not at all a swing. Okay, we don't have any movement here. But even if you would consider this one, this is the reaction, but I wouldn't just recommend after this high momentum, you just consider this one. So now let me go to the other slide. So I'll explain the rest of the stuff there. I'm going to pause and bring up the slide. Okay. Now we're back on page 3. So I'm not going to work on this based on the. I mean, I'm not going to draw them. I'm just going to show you what happened on the chart. Okay. Just a second. Give me time to find the. Okay. Yeah. This was the part that we had, right? The last part that we had here. I said that it is not a logical place to just take FTR here. Even if you were taking this one from here, this is the reaction you would get. So let me pause, and if we can find the, yeah, I have the solution for this one. I have just plotted. Just a second. Let me find it on my assist. Yeah. Okay. Now look at the reactions on the chart. Okay. So now here, this is the reaction that we have. So this is the questions that you're going to see, and this is the reactions of it. So if the this is seventh one, this is the FTR we had. This is the reaction for this one, right? So in the zone, it is getting out of the zone. Even if it has other FTRs on the way, and it has just their own FTRs, you can take trades here based on this. I mean, this range. Okay, you have to have the expectation of the um, movement that it is possible. So you have to hunt the movement which is possible for this range. Okay, here is a little bit riskier, so it could continue the movement up, but it is also possible to give the pullback while it is going to continue upward movement. Okay, you would get a trade here, which is counter trend, but later on you will see that okay, it is turning out to become a higher time frames. It is aligned with the higher time frames of higher than 15 minutes. Okay, as you see, 15. These blue ones are 15 minutes Gann swing. So here we have this last lower high. So then if we take this one after this is the confirmation, so you would take the trade here. So to take at least 3 out of, I don't know, even if you put your stop here, you could take at least 2 out of this one. So this is our last higher low again. Actually door high, yeah. And then we have this one. So here we have the confirmation. We have the reverse, and you could take a trade here. It goes up. You have to just consider that you have to first, before you go on in the higher time frame, you have to plot this movement. Okay. So the point is, so when you are here, okay, it is about. I mean, this leg is not formed in the higher time frame. Okay. The tricky part is here. Okay. So when you have this kind of movement, okay, so almost here or there, we need to have some candles to form to just be able to just predict your reversal areas. Okay. So here we couldn't just plot this one. Okay, if you just consider this, okay, here, this one, which led to the higher high, uh, this would be our FTR zone. So we have the reaction here. If you were taking sell here, although it is counter trend, you would have a loss. So, but now here, this is the reaction. Okay, you can see it. Okay, so if you're just expecting to put your stop over there and take a movement like it may not happen all the time. For example, here, if you put your if you want to enter here and you put your stop here, maybe before you get your even uh, restore reward of one, you would get stopped out, okay, in your break even or something. So now this is the last higher high. This led to that one. So here we have this FTR. This is confirmation. This is the reaction to FTR. And later on, you could take trade here or even here if you're a aggressive trader. So, and the higher and the reversal you take the trade, the higher your reward to risk is. So it is up to you. Both of them are valid. If you want to have more confirmation, you have to wait for the confirmation or kind of confirmation you like. But this is the pin bar, and it is enough confirmation to take the trade. But you have to know what kind of market cycle is that. Is it does it have strong momentum, and is it a tight channel, or is it white channel? If you don't know about tight channel, white channel, or market cycle, you have to go back and review that. That's why I said that market cycle is king and momentum is also king, because market structure plus market cycle gives you market structure plus momentum gives you market cycle. That's why both are king. So here, this is our 9-1 FTR. You can see the reaction here, even here, okay, even here, okay. So multiple places. And this is our 10th one. Let's go to the other slide. This is page 4. And if you see this one, these ones are the ones here, okay. Now, first time comes back, second time, actually here, first time comes back, second time come back, third time, and fourth time, okay? How many times do you want some liquidity point to just hold the price? Later on, it fails down, right? Even if it fails, we consider this one as our another valid place of FTR, failure of the um, actually FTR. So here, I mean this one. So now, even if it was taken, now you could take your FTR from here, okay? And this is our FTR. Look at the reaction. We have reaction here. Up until here, we don't have it, but we have the reaction. So I could say, so far, you have seen that more than 80% you have good reaction out of them if you're plotting it in a correct place and if it is true FTR. So look, now, this is the, okay, look at this. I'm going deliberately doing that. Okay, you can see that what I plotted on that chart. Okay, now this is our reaction. Now this is broken. I haven't plotted this one. It should have done. Why? Because I wanted to just teach you this major and minor, or minor or major. So sometimes we have this higher high. Even it is possible to have some FTR inside FTR because of the fractality of market. So here we have the true SNR, so which is leading to this higher high in this movement. Okay, so you can identify this movement's turning point just right here after having like, I don't know, 10, if it is 1 minute chart or 5 minute chart, you have to see that how many candles you need to just have in order to form this swing point and the Gann swing. So here we have this FTR. Later on, this FTR is here, it is confirmed. You can take trade here again. Or if you put your stop here and you couldn't get out to reward, okay, it comes back. And if you just put your stop here tight, it would be hit easily. So it doesn't matter at all. You could get inside here. And again, it is FTR. It is minor FTR. And this one is just making it bigger, okay, and larger, I mean. So we call this minor and major. When we have this, this minor one is important. Okay, if you just extend this to the right side, you'll see reaction. In this one, we don't have it. We have this break of it. Okay, so this one here, actually, it has some. Look at this one. It is the break of it. And also, again, we have this minor and major again here. Okay, on 15th one. Anyway, so this is our higher high. Okay, higher high in this movement. So again, this one led to this movement. Okay, even I'm considering this trend. Okay, we don't have any strength there, right? But we have the zone. Okay, even in the zone, you can take the higher high, and this higher low led to this zone, and we have the reaction here. This is even counter trend. So here, up until here, you don't have this turning point. Okay, but the momentum shows you the way, right? So this is counter trend for this movement, right? And if you were taking this one, here you have the reaction for that. Okay, so now you could take trade from here or there, or if you put your stop there and you're expecting, I don't know, reward of 3, 4, 5, your stop would hit or your break even would be hit here. Now, then after this one, we have this movement. Okay, we have this zone, valid pullback zone on M1. It is formed now. So to plot that, you need this one and that one. And here it is about to form. It is not formed yet. You have to just be careful that when it is live market, okay, some of these things are about to be formed, okay, in the future. Now, then this one is the lowest one. Actually, we could take this one, which is we call them like swap, I mean CP, because actually, no, it didn't just penetrate this one. When we come to that one, I'll explain that one. We need this movement to take this and come back here. So we call, I don't know, in ICD they call it mitigation, and this one is an ICD, if I'm not wrong, because I'm not an ICD teacher, I mean teacher or student. So then this one, they call it breaker, whatever, I don't know, breaker block or something. So this is similar, but FTRs are much better than. So here we have this movement and it goes up. So if you were taking some of the trades and if you were not careful and it would take all of these trades that you have, all of these FTRs, and you want to just take trade out of them. So far, you would be, even with reward to risk of 1-to-1, you would be profitable without beyond that. Okay. So here we have this one is the flipped FDR. Okay, swap one. It goes up and comes down. This one is validating. If you were taking trade here, your stop would be taken. Okay, you would have lost. But this one is again validated again one more time, and you would wait for the reaction there. You would take trade here, or if you were waiting for here, it would miss. So we are not going to just take 100% win rate. So I want you to just see the reactions, because you have a lot of other places to just trade trades. Like you could take trade out of here, out of there, out of almost 70% of this. As far as you can just identify these FTRs and zones correctly. So these are your roadmap. The other one, um, yeah, this is the 10th one. So if we extend it there, and this one is the 15th one. Okay, so I'm just going to continue this. So yeah, here, this one was down. Okay, it was the reaction, as you see the reaction there. So you could take the trade here. Even this stop would go behind this candle, or even there. If it was behind the candle, it would immediately give you 1 to 2, right? If it was behind this FTR, it would give you 1-to-1. Yeah. So, and in 15, this is our 15, yeah, major, minor. And if you were to extend this one, this is more important than this one, okay? So the middle part of this middle part, as you see, we have a good reaction out of it. Okay, if you want, you can just count the RR for this one. I don't know if you want to just take 10, 20, or whatsoever. So, and if unless you're going to plot it on the chart, you cannot believe in this one. And unless you're sure that you can just plot them in a correct way, you cannot just take trick out of this one. So here Now we're going to just find FTRs for this one. Now let's go have a look at this one. I'm going to do this like the previous one. Okay. Now, after we have the break at this one, we have this FTR there. Now here it is validated. You can take the trade here. If you were putting just type stop loss and you were taking the reversal, your stop would be hit. But if you don't put your stop very tight, and as far as you see this spread, your spread is enough. Okay, I mean not large, or you're just trading futures. It's okay. Now, or you would take the trade out of this one. Again, your stop would be hit, but here you could take a little bit better trade because you can see this shadows. Okay, so how we have this confirmation also helps you in momentum just wise, right? So if you have very good momentum like this one, when it is breaking like this one, okay, so you could trust the FTR way better than the ones that like this one with the shadow confirmation, right? So these are actually another kind of setups, just we call them, or I call them a weak sweep, liquidity sweep, I could say that. Then if they're just aligned, they're going to be great. Like here, we have big sweep, okay? So if it's aligned and it is just closed in, I mean, it's swept down, even if it don't want tick and it's closed up, it is becoming really, really high probable. So now here we have the lower low. Even if we don't have this, we could just count some lower low in the pullback. And this is our FTR. Okay, you can see the reaction here. Okay, so if you were waiting till this zone after this long move, okay, so it is difficult to break this high, right? After this much, these are all money that they're just investing to just making the money I mean the price go up like this. It is not indefinite. Okay, so that's why you're better to just avoid taking trades in the end of the leg, at least. Okay, so or at least you're like expecting the lower reward to risk. So then here, if it was just reversal one, okay, after we have this one, this is the reaction for this. So you would take trade in this confirmation. So here, reward is like at least 5 times or 4 times or at least 3 times. If you're just putting stuff there, it would be 2 or 3 times. If you put the stuff here, it would be like, I don't know, 4 times maybe. So now, again, this is our zone. Okay, this is formed. This is formed up until here. And you can plot this zone. Okay, and you can also plot this zone, right? This one. I mean, the previous one. So if you were taking, uh, I mean, uh, long trades here based off the trend continuation here, okay? So it would be loss because it is at the end of the leg and it is overextended, okay? That's why the idea of overbought and oversold. So I taught it before. They're really important, okay? So you're better to just take trade in the overbought areas or oversold areas here, okay? It is not just like you're using this, what do we call this, valid pullback to just define your oversold or overbought area. You have to consider the position of the price inside the leg, higher time frame leg, and also this one, and also the momentum. So these are all the things that you have to just put in your checklist when you want to just trade. Now, if it comes back down and it is breaking this low, later if it goes up, here is our confirmation. You see that it has good momentum when it is breaking. So that's why your expectation is that you can take trades out of going up and coming down. Even here, you put stuff there. You could take 1 to 2 at least, or you could have reversal trade here. Take that one. The first time back, second time back, and third time. These are the best ones. Okay, when it is just going beyond made of this FTR. And if you take this ones, these have huge reward to risk. So like this one, if you put your stuff there, and when you have the touch trading here, If it go a bit small movement like this one, so you would go to 1 to 10, right? If you're trading based on percent, it's going to be a very huge amount. And even if you put the contract, okay, it is going to be very huge amount. So now let's go to the other one. This is, you see this one? If I extend it here, if it continues here, it becomes this, yeah? This is the reaction now. This, okay? Now, here, this is our 19th one. So, again, the movement came back. How many times does it touch? Yeah, it came once, twice, third time. This is fourth time. Yes, this one. Actually, yeah, I explained this one. So here it is. So again, if you were taking trade out of this, the more you're just having the touch of this SNR zones, okay, the weaker they get because liquidity is consumed here, okay? So, I mean, why does FTRs work so well? The reason is that, so when you're just pushing the market up, okay, we have a lot of buyers that they're buying. So what are the buyers doing? The buyers are just giving, taking orders of the sellers, right? So what if we have like, let's say, imagine this one, okay? So we have 1,000 buyers, but we have just 500 sellers. So here, the number of buyers is way more than number of sellers, right? So it goes up, but we have a lot of buyers here that they cannot find any match, okay, because we have just 500 sellers. So what do 500 people do, okay? These are not people, these are ITs, institutional traders. They're not just trying to chase the market. They're just putting the orders based on the computer, and the orders will be left here, okay, for a while, at least for a short time of period to just whenever they come here, we have leftover buyers here, okay? So the sellers, again, the number of, we have all, not only pending market here, we have also some other aggressive market order buyers here. These two together accumulated, they force the market up, right? Now, here, let's go and plot this one, okay? Now, here we have this movement. Our swing is formed already if it is a live market here. Now, look at the places that I have plotted on the chart. Okay. Now, here is the higher high. This is our FTR. This is our reaction. If you were taking touch trade, you would get stopped out. But if you were getting confirmation trade here, this is going to be the movement you can catch. It could be 1 to 2. It could be 1 to 1 or 1.5. Or now this is the second time back, and this is also minor major scenario you learned. And in the lower time frame, we could also have this one. I didn't consider this one as 21. So this one also, it goes up. Again, this is our FTR zone. It comes back and it goes down. If you're trading out of this one here, confirmation maybe, you could trade this one. In the lower time frame, we have this. Okay, we have the hunting of this FTR, and again after confirmation, we could take trade here. In the reverse scenario, even you will try to buy here in this one, and it could go up there, and with the confirmation, even with the confirmation, you can take the trade, but it is better to wait here. If you were just taking trade here because of this counter trend, so it wouldn't give you the RRU need, so your stop would be hit, because that's why we're just plotting this gas swing. So now here we have this zone, this 21, this one, although look, you have to be careful when we have the long range between higher low and the higher high. Okay, so it is the exhaustion gap. Okay, so it means that this is the end of the movement usually. Okay, so that's why you try to avoid this kind of trades. Okay, if you want to buy, or now it is selling. Yeah, it's breaking this one. So this is 21. This is 23. So 22 were counter trend. So now if we move to the other one. Oh, by the way, this is all the thing from beginning to 23. This one is over 23. Okay, so this is overall view of what we have on the chart. Okay, this is our swing, and these are the reactions that we have it. Okay, so when you're looking like this one, you cannot just make sense out of this. Okay, but when it is explained and you could understand this, so this is going to be easy for you. Now, let's go to page 8. Here, I just didn't draw actually valid pullback zones. Even without valid pullback zones, now if you have practiced these things a lot, you will just get these reactions. You could see here. Yeah. Okay. Now here we have lower through SNR here, lower low. Okay. Then this is the part that it is breaking it. This is the reaction for that. Even in this pullback, which is out of this one, if you could not take this, so even this one could go up and it reverse back to this area. Again, it gives you this and the confirmation. You could take trade there and it goes up. So look, sometimes if you were taking this one, you're not wrong. If you're taking this one, you're not wrong as well. But this one is more valid. The ones that they're failing to give a lower low or a higher high, in this scenario we have it. But if we can assume that this was not our high, it was our high. And this was our high, this was failed high. Even these ones out of this are important for us, okay? We call them mitigations, okay? We call them like fail to make a higher high, okay? You can also take the reactions out of that, but you have to backtest them. I will show you some of the points when we don't have enough liquidity. These things are caused. So it means that it should go down and also it go backwards to QM level. Okay, so you will see QM level in the future lessons if you follow this series. So then now here we have it. Then even you take this one, it doesn't matter if you take this one. Okay, here if you see that we didn't just break this. Okay, but sometimes you have this data, okay, data problem. Even if you were taking this candle as our FTR zone, okay, it would have great reaction and you would take the trade out of this confirmation zone. So now we have lower low in the pullback zone, and this is the end of pullback, right? So here, this candle is confirmation candle, and you could take this trade or you could take this one as our FDR. It doesn't matter, both are valid. So now, even sometimes when we're breaking this one, okay, in the higher time frame, it's I mean, let's say, um, kind of swing point, okay? Even we have some reactions here, you have to just follow the reaction, and you have to just connect enough data for the reactions of the FTR, okay? So consider what kind of trigger you need to just plot. Is it just going to be engulfing candle? Is it going to be pin bars? Is it going to be, in ICT they call it IFBG, I think, inversion fair value gap, okay? These are also working very well. It's up to you, up until this point, okay? So the entry point is just something that it is your preference. Maybe you want to have the touch trading. Maybe you want to have confirmation trading. Okay, so in any sense at all. So these are the best places to just look for trade. So you're narrowing down the places that you want to just get into to trade. And you also can use these ones to confirm your bias. Okay, we're going to have some examples of it on the chart in multi-time frames. I mean, format. So here we have this one, again, reaction out of it. Here we have this one, reaction out of it. This is, you have to bear in mind, this is 29. I have not cherry picked this one. Okay, this is just one after another on the chart. You can just 6. You can just follow the time on this slide here, 22:40 and so on. Now, it is going down, going like this one is 27, 28, 29. It continues like this one. So this is the reaction for 28, which was out of this one, the first time reaction. When it is holding one, so you can trust that one. So now this reversal case scenario, you can just consider this one. You cannot get a lot of R out of this one, so you cannot expect that. So this is our 29th, and this ones are the reactions. So if we just extend this 28 like this, okay, so you would see the reaction, okay, here. This is the reaction. So now this is lower low, and this one is our zone. Okay, so you would wait for the reaction. You could take the trade out of this one. So I mean this part, your stop would not be hit. Okay, you could get this movement. Okay, so here also you could take the trade out of this, and or also out of this one. We have a very high momentum, and maybe you could catch somewhere around here as a breakout trading. So this is 31. So these are the scenarios that we have. Double time frame here. So now this is the first 1 hour. This one is 5 minutes. Okay, this one is 1 hour one. So this is the FDR. You can see the zone here. Now I want to just explain you. It works on the fractal one. So when we have this kind of FDR, you're expecting to have buy scenarios. Okay, buy scenarios here. Look, even before this FDR, we in the lower time frame, so we have this FDR which is foreign, and you're just going to take this one is discount foreign. It's going down. You could take a trade here, up there, or the second time back after this reaction and hunting this FDR. You could take a trade here on this one. So I don't want to just show you how much RR we have here. So on the higher time frame, the same scenario happens, but this time the break happens here, the retrace happens here, and this is the confirmation part. Okay, so it depends on your reward and stop loss, where you put your stop loss. Okay, so this is the date, 7th of April. It is not far back in the time. Now again, this one was, 31, the same one here, 31. Okay, so here it goes down up. Here we have the scenario I was just talking about. It is failing to give, what do we call that? The low. Okay, this is mitigation. Okay, even if you would take trick your last higher, lower high here, or this one, it doesn't matter. It works very well. Look at this reaction. Look, okay, this is our reaction. So now you would take the trade there. Now, this is the last part that we had, and this is the new one. Look at this one. This 33 is this one. Okay. Oh, just a second, because we have done 32. Now this is 33. Now this is the reaction for that. So we have this bullish, right? Bullish FDR. So we're looking for buys. So we're plotting just bullish scenarios here. So which is more probable because we have two time frames aligned, and here we're looking for some trades. Now this is our 33, as you see here, 31, 32, 33. So this lower time frame moves faster. Now this is even. This is even. Look at this one. Now if we were taking this one here, if we're taking this one here, it doesn't matter. Now if you're looking for a buy, because we don't have this chart, okay? Now, you would get stopped out if you were putting the stop here, okay? Or if you were getting trade, not touch trading, not reversal trading, you're just taking confirmation trade, you wouldn't get more than 1-1. I just doubt it, okay? But you have to just look at the reaction there because it failed to break this part, okay? So, and also this one shows the momentum loss. Okay, that's why I say this is, you have to look at the momentum of this one. I mean, when you're going to take a trade, the price is already here. So if it fails to break this one, it goes to the lower, I mean, inner or internal liquidity, to get the internal liquidity here and take it. The reality is that you should have taken this one here, okay? But you don't notice this one is a little advanced. I'm just showing a little bit of it. Okay, you can just go and practice on the chart for yourself. These usually happen out of this. But if becomes so discretionary, you'll get confused. So I want to just give you the mechanical system here, right? So this one, even if you were taking a stop here, it doesn't matter. You could take this one here, okay? So rewards are so huge that you cannot just imagine. So this is 34, 33. And as far as you're just you have the profitable strategy here as far as you have this plotting it based on the true SNR, not all SNRs. Okay, so you have to just find a way to just plot your market structure right. So now this is our 33, 34. Now here we're looking for something. Okay, now you just need to attempt as you're supposed to actually. So look, this is our last this higher high. This is the last origin of this higher high. So look at this. This is our place that it is confirmed here. Look at this momentum. Okay, if you cannot find a momentum, you can just put some moving average on the chart. Okay, and just take the high and low up or two moving average, a double moving average. So high and low of it, and if the price is reacting or breaking this higher, I mean this band, it's gonna be it shows that yeah, it has really high momentum. It's up to you to just define the momentum. If you have difficulty understanding what the momentum is, you have to go back to the momentum based on the candle and leg ones. So we have also video for that. So look at this one. Yeah, this is this reaction. Even if you couldn't catch this one, you could take this as the breakout because we have high momentum and this is tight channel. And in tight channel, you're allowed to take the uh, actually with candle pullbacks, okay, with the wicks or something. Even if you were taking this one, it would be your zone here. So if you were taking this one, it would be your zone here. Okay, you would take this and even if you were taking this one, this would be your zone here. Actually, this is your zone, okay? Now, this was 33, 35, and now we're going forward here. I'm not going to explain a lot. If there is anything, I'm going to just explain. This is our higher time frame. So, okay, this is inside that. So even this higher time frame before uh, this I mean, the second zone is formed. We have the reaction to the lower zone, and later this lower zone just leads up to confirming the higher time frame zone, right? You can see that this is just working like in a fractal base. The lower time frame even can lead to higher time frames or delivers higher time frame FTR or vice versa. Here you have FTR. Look at this one inside this one. So if you see this one, you cannot go back. Okay, it's kind of learning something that you cannot unlearn it anymore. You see it on the chart everywhere. So this is our 36. Yeah, you see there. This one, 36. And here again, the place I told you, right? This was 36. This was the place, I think. Yeah, wait a second. Let me plot that. Yes, that's right. 30, 30. When you're just changing the chart, I mean, moving the chart aside, it's just trying to auto, what do we call, set it itself. That's why. So the scale is changing. So here we have this. We consider this candle and it is confirmed here. This is the reaction and you would go there. Even here, if you could see that, okay, it is not going to break this one, you could take this one or you would wait for another, look at this one, another one to break and just take the break out of this. Now this one, this is the last slide. So, I mean, this is 1 hour long video. It's the longest video ever. So now 1, 2, 3 movement. So we're going to talk about the measured mode in the future. So very important that we just not only you can just get the entry based on the touch trading, have the higher reward. You will get the almost approximate or rough idea where the end of momentum is. That's what we call it, measured moment, measured move. So here we have this one. If you can, I'm going backward and forward. So this is our higher high. This is failed one. Okay. So we would take this failed one or this one. Now in this scenario, we have higher high. So this is our FTR zone. Okay. This is a confirmation. So here is the retest of confirmation. And you would, if you want to have deeper reaction, so you would wait for this one, or you would take this one with confirmation entry. Or here we have this one. Here we have one candle FTR. This is this hunting of FTR. If you would get it inside the trade here, you would get stopped. No, you wouldn't get a stop down. Okay. So even with the hunting of it, look, this is liquidity which is taken by wick. Okay, this is the thing I was talking about. So it happens not only here, but it usually this week one happens in the for the outer liquidity. Okay, and like here, if you go backwards on the left side of the market, I could guess that there are some zones that it is hunting, like this one is hunting this one. So, anyways, this is going down, and it goes down there. Okay. Oh, we have one more. So 19. And maybe this page's number are not correct. Okay, you have to just go and maybe this one is 18, the previous one is 17. So it doesn't matter anyway. So here we have this zones 21 and this one, the highest part, you can just imagine. And here we were looking for buy, right? Here because this is 32. Yeah, here. This is we're looking for the buy here, which is failed. Okay, this is failed. So this one is for selling scenarios. Okay, but if you were looking for the buy here, it's going to be counter this trend. Okay, that's why this is the first time frame you have to plot it. You have to just say find the direction, and later you just come and find the zones, and later you will find the FTR zones here, and you take your trade with this one, and you have to just trust money management and reward of this risk. Other than that, you cannot be profitable. Here we have this one as well. Okay, this is also a counter trend move to this leg. As you see it, this is counter trend move. End of the leg, you can just take some trades, and at the end of the leg, when you have this kind of shadows, which is just hunting the previous ones. So these are really high probability, although they are end of the trend. And if you have the measured move here or extended measured move here, okay, this exhaustion. So you could take the trade with more compliances. So here, this is our FDR. So you see how big the zone is. So it shows that this is the end of zone and also loss of momentum. So yeah, here even the middle of it or touch trading here, okay, we can take the trade. If you were taking the trade here and you wanted to just take this, you would be stopped out. You would put stop here. In Albrecht system, it is second pull, second leg, it is coming out. Yes, if you just consider this, it goes up. No, it is breaking that one. This is not second actually. So if it was not taken this one, it would be a second leg based on Albrecht system. And if you want to have better chance of winning the trade, so you cannot just consider one time frame like this. At least you have to just utilize two of them. So here, if you look at this one, this is the scenario I was just talking about it. So this is Albrecht system. So this is one two leg or second entry scenario based on Albrecht. So he would say you have to enter just right here. Okay. So if you have this confluence of this FTR here, and also you go inside and find some FTR breakout here, these already alone, this, I mean, already they are profitable. There are a lot of traders that they're taking trades using just this pattern. Okay. This flag pattern or two leg pattern or second entry pattern. And if you just have more complex like this one, FTR inside FTR and pull back, so the probability of this is going to be high, and the reward of this kind of trades is huge. Okay, usually they're formed when they're breaking a very major um, liquidity zone or tension areas, okay? Or at the end of the zones that they want to reverse back. So here we have another one, but it is not going below. I mean, this one here, you see that? So that's why we cannot consider this one having high probability. So we have 22. These numbers are not correct. Okay, so I am sure that I have 18 pages. So maybe some pages are skipped. Doesn't matter. You can just take a screenshot of this ones if you want that. So here, this is the zone that we have, right? This is the zone we were talking about. So this is our pullback. So your entry would be like here. This is our second pullback. This is the part, which is, yeah, corresponding part here. Now you would just look for FTRs here and get involved in this one. So easily, instead of putting this much stop loss based on the candle, you can put the stop loss based on this one, and this is very high probability. So now, yeah, as I plotted there, this one is also in the reversal scenario because your market cycle here is almost a range, and you could just trade some of the range market when they're reversing. And now this is the end of our video. Okay, so I hope you liked it, and please write in the comment if you have any difficulty or contact me, or and please backtest it unless you trust the system. I mean, you trust the zones. You're not going to take the trade just based on the zones. You have to add more confluences. Just don't forget that you have to just have 3 to maximum 4 trades or even 1 trade to just be profitable. And see you on the next one. Bye bye.